Obviously, if you're trading multiple times during the course of a session, then your earning potential is a lot greater than it would be if you were trading from support to resistance or vice versa. This line here is highlighting the trading session. And this day we've got 1, 2, 3, 4, 5, there's 6 setups in there. Not, like I said, not all setups are going to be taken. Some of those setups are actually going to be filtered out. Some of those setups, they might be relatively quick scalps because the scope of the trade is just not that big, but you might be able to squeeze 1 or 2 hours out of the trade itself. So this is basically how I approach the markets, and I'm pretty much looking at them on a candle by candle basis. I'm then using them to time my entries rather than zooming out and only trading 2, 3, 4 times a week.
All right, folks, welcome to the very first episode of the Dynamic Traders series. I've got my own private mentor, JJ, in the house. Welcome to the show, JJ.
Hey, good to be here.
Hey, folks, well, what we're trying to do here in this series, which is a spin-off from Trading, is really help you guys become more of a dynamic trader. Now, this is something I experimented with just recently. I've been learning from JJ for the last 4 years. Probably not the best student. You're going to find out some of the things I did wrong in the coming parts of this episode. So stay tuned for that. This is probably something that you're also doing wrong as well, which is really just, I suppose, every trader's flaw, which I'm sure you went through yourself, JJ, didn't you? Like these flaws that us traders have at the start.
Oh, for sure. Absolutely. Yeah. I think it's just something that just is a part of the journey. Yeah. Absolutely.
And look, I mean, if you guys want to see a little bit more from JJ, find out his journey, then there was a podcast that we just shot recently. Go and check it out. We'll probably include a link in the description to this one so you can go and find out his full story, also see his track record and all that sort of good stuff. So what we're going to do in this one is actually talk to you guys about how we've decided to create this thing called the Dynamic Traders Club. You're going to get to follow our journey in terms of creating this club where we're looking to take traders from, either clueless or completely new, or they've been around for a while, into profitable traders, consistently profitable traders. And we've already started the journey, and we're going to show you some stuff during this interview where we took some beta testers and actually gave them some tasks to do, and that gave us so much learning. You're going to find out what that learning was as well. Now, we're also going to dive into some nuggets here as well, give you guys some little tidbits to help get you into a more of a dynamic trader space. In fact, being able to just read price and stuff. So this is what JJ is an expert at, is reading price. I mean, some of the stuff he's come up with has been like blowing my mind in terms of the breadth and depth that he's gone into around understanding why price moves from level to level, from this price to that price, or even what traders are doing on every single candle. And there's a reason for this. And we're going to dive into that now around why his trading is kind of different from a lot of the other people out there on the internet that you'll see. So JJ, do you want to share your screen, and then we'll just have a look through why your trading is different from what most other people do?
Sure. Absolutely. First of all, let me tell you what I don't do. I don't trade between kind of like support and resistance levels. What I say, I mean, I do trade between them, but I'm not, let's say, entering here at support and exiting, waiting for a trade to get all the way to the other, to resistance in this case, before I take profit. I'm just not interested in that. As you can see, I mean, this is a 5-minute chart, and basically you can see there's an awful lot of candles you'd have to wait, from the first time, perhaps your first entry, and until you hit target. It's like 963 5-minute candles. I'm just not interested in that. That's like one trade in 963 candles. You can do the math and work out how many days that is. But you can see here at the top, okay? All right, you've got 1, 2, 3. It's 4 days. Well, that's one trade in 4 days. I'm not interested in that. I'm interested in actually trading the candles themselves, but I will pay attention to support and resistance.
Now, if you're loving the show and thinking, where can I go and trade? Why don't you check out my prop firm sponsor, Blue Guardian. Now, these guys have been around for ages. They've been sponsoring Trading Up for over a year. And some of the key features that make them so good is that they've got realistic profit targets for their challenge phases. It's only 8 or 4%. They also have a scaling plan up to $2 million, and they do profit splits of 85%, which is really high for this industry. They also have quick and reliable payouts and a robust reserve that make sure those payouts are as seamless and smooth as possible. Now, if you're looking to join, go and check them out. But first, grab my coupon code TradingNut, all one word. You're going to save yourself 25% off at checkout. There's a link in the description. Go and click that now. Right, let's get back on with the show.
So all of these arrows that you basically see here are just one strategy, okay? They're highlighted entries for one strategy. As you can see on this day here, this trading session, which is the start of London to I wouldn't say, well, it's about an 11-hour session, okay, from the London Open onwards into New York, okay. So this one strategy alone has produced four setups, actually 5 setups during that session, okay. And you see these here the next day for a good 5, maybe even 6. The next day 5, 6 again. And you're going to get a day here where you only get 1 and you get 2 these days. But on average, it's probably usually 4 or 5 with this strategy every single day. That's what I want to take advantage of is the shorter term moves. Okay. And if we basically, we can zoom in. So I'm looking to take, to enter a trade and not wait too many candles before I start taking profits. Okay, so let's take this setup here. Okay, I can be in the trade 5, 10, 15 candles perhaps. Sometimes I'm only in the trade 1 or 2 candles. Okay, it depends exactly what the chart is telling me at that given time. Okay, and I can do this multiple times per day. I'm not, like I said, I'm not interested in waiting 963 candles. I have to sit through, through overnight, through the overnight period. I'm just not interested in that. Give me multiple opportunity in a day, and then it personally keeps me focused on what I'm doing. I don't get bored. I can take just as I said, with this strategy, 4 or 5, good setups a day. I'm not going to take every setup. Okay, there's a filtering system in place. I'm obviously looking at support and resistance. I'm looking for reasons that's going to make my trade go wrong. When like I said, it's going to ultimately keep me focused. It's going to keep me in my little trading zone, if you like. Okay. Obviously, if you're trading multiple times during the course of a session, then your earning potential is a lot greater than it would be if you were trading from, just basically between support and, from support to resistance or vice versa. Yeah. Again, you could, this line here is highlighting the trading session here. And this day we've got 1, 2, 3, 4, 5, there's 6 setups in there. Okay. Not, like I said, not all setups are going to be taken. Some of those setups are actually going to be filtered out. So some of those setups, they might be relatively quick scalps because the scope of the trade is just not that big, but you might be able to squeeze 1 or 2 hours out of the trade itself. Okay. So this is basically how I approach the markets, and I'm pretty much looking at them on a candle by candle basis, and I'm using them to time my entries rather than zooming out and only trading 2, 3, 4 times a week. That's my general approach.
And it's quite interesting because, I mean, you're basically, this isn't just the only strategy you use as well, right? So this is probably one of, I don't know, 20 odd that you've taught me over the course of the 4 years. So this is like,
oh yeah, for sure.
Like, even though you're thinking like, 4 or 5, well, that's not that many, but the reality is there's probably another, like in these days, you'd be getting upwards of, I mean, geez, you could almost trade every candle, couldn't you? At the end of it, really.
Close to. Let's take a normal day. That normal session from when London opens, for about 11 hour, for about 11-hour period. There's going to be, for me, probably in the region of 35 setups across the basket of strategies that I actually use, which is a considerable amount of trading, especially compared to somebody who's trading, just support and resistance. There really is, when it sort of when you get to be able to use a basket of strategies, then really speaking, you don't need to be trading multiple markets. You're going to get plenty of trades on one market and just one time frame.
And the skill, this is what you folks will learn as well. The skill sort of comes in terms of two things which aren't to do with the setup or the underlying strategy, but really how you filter out those setups to go, these are the ones I'm going to take. And then how you manage the trade when you're actually in the setup or in the trade. So you've got triggered and you're in it, you're going to manage that trade. That's the skill. And that's kind of what we did with these guys in the beta test, isn't it?
Absolutely. I mean, I put the biggest emphasis the most important emphasis is definitely on the trade management. Far more than the entry. You can get the entry wrong, but if you manage the trade well, you can perhaps get a break even. You might even make some profit as opposed to a loss. On occasion you're going to get a loss, of course, but the trade management is so key. And I've seen that just being overlooked. It's perhaps by many traders, especially new traders, people new to trading. It's not really considered. It's like, here's my entry, here's my target, and I'm going to let the trade do its thing, and find themselves needlessly losing trades because they just can't see what is there that's going to actually make their trade either underperform or become a needless loser. And that can cause some serious, given time, that can cause some serious psychological issues for traders moving forward.
Now I want to do some hypothetical stuff here. So if you want to zoom out on that chart again to where you were initially. All right, so 400 pips is that full range across those four. It's really kind of 4 days from the bottom to the top. If you were going to take, let's say, if you're going to take a 40 pip stop loss, right? Let's just assume your stop loss is going to be 40 pips. So therefore, you could get a 1 to 10 on this trade, which is good. So I suppose, can you measure 40 pips from where it hits the line? Does that give us a 1 to 10 if that original?
Yeah, I mean, there you go.
How many pips is that? Or points?
Well, it's 928, right? So I did, because it's gold.
So it's 92.
I divided by
92.
Yeah. They're points, right?
Yeah, points. So 92 versus so really, if you decided to just fade that level, you're going to get stopped out the first time. What about the second time it goes through? Does it give you a chance to get your 40 pip stop loss in? It looks like it may just do
if
it.
If he calls in the second time,
just somewhere there.
If you call in here the second time.
58. So you get stopped out again. So you're trying to get that 1 to 10 at that level. This is hypothetical, right?
Yeah.
Then assume you did, right? Assume you did. Say you had say instead of 40, you had an 80 pip stop. So you would have got in the second time. So you've lost 1R. Then you've won 1R. Now you're up probably at that point where it's halfway, you're up obviously 200 pips. But, so you've got a chance to get out there. If you put your stop to break even and think I'm just going to go to the other end, you're out at break even. Basically, you've spent the whole week trying to get this 10-hour trade or whatever, hypothetically, obviously, and it might be completely fruitless at the end of it. Like, end of the week, you made no money, or you lost, or you broke even. Then you've got to wait a whole nother week for the next setup. So why don't we zoom into the chart again and have a look at some of the potential opportunities that come with this setup in particular. Assuming that some of these are going to be filtered, but if we look at the ones that aren't filtered, which I know you haven't gone through and worked out yet, but hey, let's just do it anyway. How much, and like say the first day, I mean, what's the potential there that you could have got?
Okay, so this setup here definitely wouldn't have been filtered. Okay. and if we were trading this setup with a standard stop order at the low of the setup candle, okay, we'll take a measure of that. Okay, and that's how many?
38, 36. Yeah.
Yeah, say 36.
Yeah.
Okay. And the furthest distance that it gets to is 281.
Yeah. So that's not 10R, but it's probably like a 6R trade, maybe. I'm trying to do the maths in my head. Maybe a 7R. Sorry.
Yeah, I think it's a little bit more than that. But
yeah, actually might be 9R trade.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Yeah, so and how many candles would you have had to wait to have got for the chart to move that sort of distance? It's
16 candles, so that's 50 minutes.
16 candles.
Yeah, plus.
Yeah. Okay. Around 15, 16 candles. Well, I would rather take that than a 10-hour trade that I had to wait 963 candles for. As soon as this trade is finished, then I'm waiting for, I'm looking for the next opportunity, right? And I know I don't have to wait 963 candles before that opportunity is going to present itself again. And that's just with this strategy, okay? So what people, don't notice or fail perhaps to realize or don't even understand when they're at the chart, okay, I need to zoom out again, yeah. All right. Let's assume you had a wider stop here for argument's sake, right? And there was no stop out. The trade gets more than halfway to target and then comes all the way back to the entry. People, that doesn't sit well with people. They can come back to the chart and they'll just say, I've given all my money back. I hope now that, which it did in this case, eventually go back up and hit target. I mean, I'm just not going to let that happen. Me personally, I'm not going to let it get that far to target and then sit there and watch and give all that money back. I would sooner take some profit and wait for an opportunity to go long again. Even if ultimately this was my ultimate target. You've got the psychological side of it as well, which nobody sees or feels, when you're just looking at a chart like this. But in reality, your trade goes up, you've made $1,000, and then you sit there and you give the $1,000 back needlessly because you don't know, perhaps you don't, you're not using any trade management. People just don't see it and understand these factors.
Or it's quite simple, basic trade management. So they call it trade management, but it's not really managing the trade based on the price action that's happening in real time. It's kind of like more of I'm going to, move my stop to break even when it gets to 2R, and I'm going to move it up to 1R when it gets to 3R, that kind of thing. What JJ has taught me and, teachers is how you actually read these candles one by one to know what is likely to happen at a high probability and when to move your stop, when to get out of the trade, when to take a partial, when things are looking pretty sketchy, to maximize what you've got in there and also to save your account from, getting into drawdown. So it's quite fascinating. Now, what we did was we actually got some beta testers, 3 beta testers, in fact, to learn this method and of trading, i.e., managing your trades and also filtering out trades, along with that strategy that JJ's just shown you. Now, we wanted to see, we just wanted to learn how would people react to this kind of approach? What things could we learn from it? And I mean, tell you what, mate, we learned an absolute ton, didn't we, in terms of what these guys, there's only 3 of them, went through and did. and then what that meant from our point of view in terms of like where everyone is kind of failing, and I think it's been failing in the industry forever. Do you want to elaborate on that?
Yeah, sure. I mean, it was, yeah, the information that we collated from it was very, very interesting. Much of it I was expecting, especially in terms of, and I spoke to you, beforehand. The people have a tendency to cut corners. When they cut corners, they want to do it. They want to do it their way. It's a bit like not wanting, you buy a new product and like an electrical product, and you just don't want to, you don't read the instructions, okay, and you just dive straight in, yeah. And there might be certain information in that instruction booklet that is important, and you find yourself wondering why you've got an issue, with this product. But yet, if you'd have learned about the product before you actually started using it, then you wouldn't have encountered that problem. Okay. So basically, people have a tendency to be, some people struggle for time. Okay. So I don't like to use the word lazy, but it's in our subconscious where as an energy saving, time saving mechanism, we think, by cutting corners, rather than going from A to, you want to get to C. The wise way is to get a B first before you get to C. But what we have a tendency to do is just miss out B and go straight to C. If you do that with trading, you're basically denying yourself valuable information that you can use to your advantage. Okay, so I was kind of expecting people to cut corners. What I wasn't expecting was that the amount of corner cutting they were actually doing. Yeah, and I'm saying, well, you're going to struggle here now, right? We found out this after the event. Okay, but when we spoke to them after the event, it was of no surprise why they were struggling with certain aspects of it. Because we found out they just either didn't take them seriously, or they spent no time at all actually learning about that part of the course that we presented them.
Yeah. I mean, the other thing is I think people get that excitement as well. It's the new shiny object syndrome, where they just want to dive in. And it's like, oh, well, I'll just have a go at taking some of these trades. And hopefully I'll go back and I'll have a look at all the material and work out what I need to do from a learning point of view, which you kind of justify it to yourself that, this should work. But the problem is that I don't know. Well, actually, I don't know what the problem is, but I think it's maybe despondency that stops them from going back and going, well, now I'm going to do the work, because you kind of just get sucked into a vortex of, I suppose, emotional vortex where you can't step out of it and go, right, well, the whole problem that I have now is the fact that I never did the work in the first place, to then go back and do the work, to then come back to it with a fresh sort of slate and a fresh view on it, because you've already muddied the waters to a certain degree. Do you see that as being sort of like a potential further issue?
I'm a firm believer in, starting as you mean to go on, and there was information. Some of the information that we found back was absolutely what I did find particularly alarming, if you like, was the lack of knowledge that they had of the markets in general. I'm not saying you need to be, you need to know everything about everything when it comes to making money from the charts. I'm not saying that at all, but just lacking basic knowledge, that is stuff that you should learn, way back when you started. The very basics, some of the very basics were overlooked.
And can you explain the basics, like what kind of things they were?
Well, I mean, if you just take candles in general, like the open, high, low and close, they're very important parts of a candle. They're the only four parts of a candle, really, right? They're the only four elements of a candle. Okay. but they hold a wealth of information if you know how to read them. Okay, especially you put those candles in context, then they can create pretty powerful pictures, yeah, of where the market's going to go, what's going to happen next. Okay, it can tell you things like when your trade isn't working out. So you can bring in some effective management in there, and maybe make a little bit of money or take a break even rather than taking a loss, or taking even a small loss. And small losses you can take, pretty much all day long, and they're not going to really have a negative impact, on your P&L. Basic things like that. It's just like you don't know this stuff, right? And yet this is stuff that you would find. You could go onto YouTube tomorrow and just type in there, a basic Forex course. And every one of those is basically going to show you the 4 parts of a candle and certain candles as well,
Do you know what I think people get caught up on is they'll go and watch the course, right? Maybe they watched it 4 years ago or 10 years ago, whatever it was. However long you've been in, you'll go watch the course, then you'll take some trades based on the course. And then you'll see that some of the stuff in that course didn't work. And you'll lose faith in that, right? So because you took a trade and you was like, oh, it's a morning star pattern, right? And you thought, oh, it's a morning star, it's a reversal, brilliant. Here we go. I'm going to take that trade with the reversal, and it doesn't work. And you start to doubt that pattern works. And then over time, everything sort of erodes, and the whole candlestick thing erodes. And then you start hanging your hat on like terms that other people have like seem to be having success with, and go, right, I'm just going to learn that one particular thing, and it's at too much of a high level versus the actual candles. It's sort of like bringing it back too far, so that then it has even less impact, and they end up, ultimately trading the chart, which was what we've talked about. That's kind of what I think happens, and I'm, in a way talking about myself there a little bit as well. Now, so just so everyone knows, here's what we did. We got these guys all together, gave them a 2-hour intensive, and it was intensive. I thought surely these guys are going to be like, right, I need 2-3 weeks to try and digest this material, because there was like 40 slides in there. It was quite detailed, and no, they were trading it that day or the day after at best, and either trading it, trying to trade what they remembered, or going, well, I'm going to take that bit and that bit, pick a little bit out, and then trade that style because this kind of relates to what I was doing, or not really. I think one of them went through and watched it like at 1.5 speed and didn't take, and like nobody really took any notes, right? So there was no notes taken, and even without notes, I know that there's no way you're going to be able to like pull this off, because the key thing we found is you need to burn it into your brain. And I've had people on the show before talk about this, but it is such a key thing. And that's kind of the big aha moment for us, wasn't it? It was like, these guys need to burn it into the brain. So how are we going to get them to do it?
And that comes from one way only, in my opinion. It's repetition. Repetition is seeing that candlestick or that event happen in time and time and time and time again. Okay, once you do that, okay, and you start to get a better understanding of the chart, you take that event and you wrap context around it, and when you do that, you can then considerably stack the odds in your favor. If you don't do that, candlesticks basically in there by themselves, you take context away, they're really not much value at all. You have to wrap other information around them. And like I said, that's a repetition thing. So if it's what does repetition take? It takes, well, it demands time. So, and like you said earlier, people just want to jump in. They don't want to read the instructions. Okay, they say, all right, I've just seen this. You show me a future. Okay, I might be able to make some money from that. And they don't know how to differentiate the difference between what is a good quality trade setup and a poor quality trade setup. So they're compelled basically to take every setup that comes. And when when one of those trades loses, they really don't know why. As an example, let's say they jump into a short. They're going for 1 R. The trade gets 0.5, 0.6 R. Okay. And then the market turns around and stops them out. and it stops them out and then drops back in their goes back in their original intended direction, and the trade would have gone on to win. It's frustrating things like that. Much of that can actually be avoided. Yeah. So corner cutting, absolutely don't do it. It would be my advice. And secondly, go through the pain of the repetition. This is the trading at the charts is very, very visual. You know, one of the testers basically chose to listen to the video twice as opposed to watch it. And trading's visual. You know, it was an automatic denial of very important information.
Yeah, it's like I watched a little clip on Instagram just the other day. So Tiger Woods, somebody asked Tiger Woods, like, what does it take to what do I have to do to improve my golf game? And he just said, look, stop watching YouTube videos and hit balls, just hit as many balls as you can. And so it's that repetition is what he's talking about. And I actually asked a friend of mine who dropped his score from like 90s. He got first score under 80. And I said to him, like, one night we're in the pub, and I said, like, what did you do? And he goes, I just hit balls, just like hit as many balls as I could. So repetition. So that what we decided to do was sort of do a second round of beta testing and put in place something that can give these guys a structure, almost like a university course, college course kind of thing, where they actually have to go through and do assignments. And these assignments are based on the lessons, and these assignments embed repetition without, I suppose, letting them go ahead into the next area of the program to learn more until they've done the assignment, and then doing an exam at the end to make sure that that information has been learned. And you get, penalized if it isn't, just like any other bog standard university or college course that you would go and do. Like, if you do not pass, you do not get moved into the next year. You've got to take the paper again. That was the thinking, wasn't it? It was like that was sort of the big aha moment for us. And look, and I say this myself, like, as somebody who would normally cut the corner, but I know that it's just not the way that you can do this. You can learn this stuff.
No, absolutely. Like I said, cutting corners is an absolute no-no. You know, when you go into a university or you take a college course, right? You have somebody there ensuring that you're actually doing the work. They're overseeing what you're doing. They're checking your work. They're scoring you, marking you, grading you. Then they present you with exams, okay? Which, when you think about it, ultimately, that's what the university or the college, right? You know, it's important for the college to have to be held in high regard, because, there's a good pass rate then, for that college, okay? If the college is not ensuring that you're doing, that your work basically, and overseeing it and checking it, then you're far more likely to not pass that. That's not a good reflection upon the college, okay? But is it the college's fault that you didn't actually, that you cut corners and you didn't do the work? At the end of the day, nobody can actually force you to do it. But what the college is actually doing is holding the students to account, okay? And they're taking every possible step to try to ensure that you do the course and you do the course properly. And only then you've got your best chance of actually passing that course, okay? They're basically removing the cut and corner element, okay? Somebody is there just saying, no, you can't cut corners. If you cut this corner, you can't move on to the next module, for argument's sake, right? Who does that at home? That has to be self-imposed. If you take a trading course off the shelf and you want to miss out, section 2, there's nobody. The only person that can hold you account to missing out section 2 is yourself, and that takes great discipline. So cutting corners, absolute no. So I think the kind of like the university approach, where you're holding students accountable, they have to be willing to be held to account. Okay, but if the students are willing to be held to account, then that tells me they're the ones that are happy, that are willing to be held to account and are willing to go through the pain to do the course properly.
Yeah, it's kind of like, if you're one of these traders that have gone and done a million courses, and you've got them all sitting there on your drive, but you're not actually even using some of them, then this may be the step that you need to take to get to the next level. Now, we've got these beta testers already that are going to help us out and go through and do the next tranche. Now, we're probably going to be opening this up to other people who want to go through and be almost like founding members. You'll be the first sort of tranche of people going through this in full. So if you're interested in that, what we're going to do is hook a link up below the video here on the podcast description. Go and check it out. But put your email address in. There's also a chance to win a $150,000 mentorship with JJ himself. So go and check that out. You get to see his track record in there as well and a bit more about the series. So there's a video that explains all that. And there's a survey which will give you an extra entry into the prize draw. So folks, go and check that out after you finish watching this. Now, what we're going to do is, get these guys going through this, and then at the end of it, we'll share the results back here on the show. So every week we're going to be dropping these Dynamic Trader Series shows. So if you want to follow along the journey and see how we're tracking, then this is where you want to come. Make sure you subscribe so you don't miss it. Now, there's a couple of ways you guys can actually get involved in this show. So number one is we're going to do Q&As here. So if you've got a question for us, then please either leave it in the comments if you're on YouTube. If you're in the podcast, then hit us up on support@tradingnut.com. Just call it DT Dynamic Trader question or whatever it is. We'll work it out. The other thing that you can do is work out, or let us tell you, or myself and JJ, or JJ himself tell you why your trade failed. So if you had a trade this week that you thought was 100% going to work, this was my strategy, I've had a losing streak, surely this was the perfect looking setup. If you want to know why it failed, then flick us a screenshot of that trade or a link to TradingView with the trade highlighted, obviously, where you got in, your stop loss, where you were wanting to go, your take profit or whatever it was. We'll share some of these here on the show and actually work out, I'll tell you why the trade failed. And this is something that JJ's able to do with his knowledge, and I've learned enough to probably be able to do it myself as well. We're going to basically critique these trades. So if you want your trade critiqued, head down to the comments. And actually, in this case, you're going to have to send us an email because you're probably going to send an attachment or a link. It's support@tradingnut.com for now. And last but not least, if you do have any ideas for the show in the future, then please send them through as well. Just hit us up in the comments for that. JJ, any final words here before we move on to the next episode and episode number 2 next week?
Yeah, fast coming round. I can probably add one or two things on here. I think you've covered pretty much, you covered good points there. I'm interested to see the trades that, if people want to, take the effort to basically send them through. Obviously, you're only going to do that if it's important to you, I would say, I call it capital preservation. If you can understand why your trades are not working out, you can do something about them before taking what I would call basically a full loss. Okay, when you take a full loss, we all take losses. Don't get me wrong. Okay, but when you're needlessly taking, 2, 3, 4, you get 2, 3, 4 losers in a row. Okay, and you don't know why. That's having a negative impact. Most traders, for example, are not likely to take the 4th trade that day. If they they started the session, they get a loser, they're underwater, they take 2 further losers, and they're not likely to take the 4th trade. That 4th trade may have been the trade that would have recouped all their profits. Okay, so if we can avoid getting successive losses, or reduce the odds, I should say, of getting losers in succession, then you don't have to deal with the anxiety that basically throws at you and creates, right? And one of those is the trust in your strategy. You have a bad day today, and then you have a bad day tomorrow. And you look and you say, oh God, I've drawn the account down 10% or 15%. If you can protect that capital and not have those big drawdowns in the beginning, it's so much easier to move forward. I have no problem in cutting a trade short if the probabilities are that the trade won't work out, even if the trade actually does go on to, to make a good profit. Okay, I don't make my decisions based on emotions. I make them based on what the chart is actually telling me at that time. So anybody that sees any importance in that, take a screenshot of your trade, send it to us. I will take a look at it.
Cool. Now, one thing I did forget to show earlier on in the show, which I'm going to show now, is how some of our beta testing actually turned out. So let me share my screen here and show you through that. So here we've got one of our traders, Ali, who was actually on the show before when we did, JJ released a strategy on the show. So if you stuck around to this, you might want to go back and check it out. But this was his trading on the very first week that he tried it, right? So we kind of looked at it and thought, okay, well, these are some half decent trades. There were opportunities for him to get out down here. So to take more R than he took, this was a good 6R trade for him, right? Here, I think he managed it quite well, and this one was a small winner. Now, he did really well in the first week, and then we had also Mark, who was trading this. Now, this was his trade that he took, so he was looking at a fixed target. Now, he didn't follow the rules exactly. He had a sort of hybrid rules on the strategy, but anyway, he got in. And he did do a lot of the filtering, which was good to see. And the end result was a winning trade. I think he got 2.8 R out of this trade. So this was one of the setups that came during the week. Now, the other thing that I actually did during the week was I started trading it myself. And just to show the guys, if I was going to trade it, these were some of the trades I would trade and took. So this was one of them. So this, you don't need to get the massive R. I think this one ended up being 0.8R or something like that. And I took various percentages off at various times. So that was trade number 1. I did take 3 that week. This was the next one. Same kind of deal. Price didn't really find itself going any higher. So I was actually sort of getting out at at prices that were helping me stay or preserve that capital, shall I say. And then finally, this was the last trade I took. Once again, didn't really go that far. And I wasn't looking for the, big winners here. I was just like going, hey, look, guys, if you're going to trade this is how you can trade it and preserve your capital. You're sort of missing out on some of these opportunities here just because maybe you're being a little bit too conservative with your filtering and that kind of thing. So, so this is hopefully giving you guys a bit of an insight as to how some of the real world trades have played out here on using this approach. And I suppose the last thing we should talk about is the fact that these guys didn't even know the strategy, did they?
No. This was most interesting. Okay, so we presented them with an alert as opposed to giving them the core rules of the strategy. Okay, and there was a visual alert. That would highlight the candle they were going to trade. Then they were shown where to put the stop loss, or options of where they could put the stop loss. They were shown where the entry was. And it was up to them then from the 40 or so slides to determine whether that setup is high probability or whether it's low probability. And if so, they could filter that low probability trade out. Okay. Of course, what made it incredibly interesting was because they didn't know the core strategy, they couldn't backtest it. So they were taking a bit of a leap of faith, okay, within reason. But point being, we wanted to demonstrate how important, basically filtering the trade is, and trade management when you're in the trade, rather than putting the emphasis on your core strategy rules. Highlighting when your strategy's edge has presented itself and saying, okay, I'm going to trade now because there's my setup. If you do that, you're going to trade every setup, and you're not highlighting whether that trade has got a really good chance of being a winning trade or a poor chance of being a winner. Therefore, it's more likely to be a loser. Yeah, that was most interesting, I found.
And we were able to sort of tweak the what we were giving them was alerts, right? So they get an alert on their phone or on their PC, and it would say, right, now you can start looking for this particular thing to happen. As soon as that happens, you've got to make a decision as to whether or not you're going to trade that candle or not, and where you're going to put your stop loss and how you're going to manage it. So it was really unique way of doing it. And they also got sort of alerts when the setup was over. So the setup may have happened and there was never a chance to get in, and it completely cancels. Or there might be several candles in between where they've got, the setup happening on multiple candles that they could get in on. So it was quite dynamic, as per the Dynamic Traders Club, Dynamic Traders series. Hey folks, that's episode 1 done and dusted. Well done, JJ. I think you did a fantastic job, mate. Folks,
I've really enjoyed being here. It's been great. Yeah, I'm looking forward to the next one.
Brilliant. Well, look, if you do want to keep on track with this series and you want to get a chance to win that $150,000 mentorship with JJ, then there is a link under this video. You're also going to get to see his track record as well. We've got a little video in there, and there's a survey that will give you an extra entry to that competition. So go and find that survey as well. Folks, we'll see you in the next episode of the Dynamic Traders series.